So that would be $700,000 tax liability on a $10 million aircraft.
So if I own Acme Construction Company, does Acme Construction Company own the plane, or is it Plane Co. owns the plane and then the construction company leases it off of plane? Like, what does that look like?
Excellent question. And the answer depends on the sales and use tax planning involved, typically. For a number of reasons, some are not tax related. But the main tax one is many times for sales and use tax planning purposes, we need a separate entity to own the aircraft. Okay. So that it can serve as the lessor of the aircraft and lease the plane from Plane Co. to the construction company. And the reason why that matters is sales tax can in some states be paid on lease revenue rather than upfront on the purchase price of the plane. If you went out and bought a $10 million aircraft in Indiana, let's say you didn't work with the tax advisor at all, you just went out and bought it. Indiana would impose 7% use tax on the plane. So that would be $700,000 tax liability on a $10 million aircraft. With proper planning, the aircraft can be leased from Plane Co. to Construction Co. in this example. That 7% can be paid over time on lease revenue. And the real beauty of that in Indiana and states like Indiana is if you sell the plane after 4 years, for example, then you've paid 4/13 of what you would have paid up front. Right. So the remaining 9/13 stays with you when you sell the aircraft.
The bottom line from my perspective, what I'm hearing is if you are even remotely interested in owning a jet, you need to have this stuff figured out prior to even talking to anybody about a transaction.